In private credit, should you stick to a few large bets or many small bets?
Yeah, thank you for the question. It's a very interesting point. And your strategy going to differ based who you are, right? So we are asking this question as a manager, as a credit manager, maybe not necessarily as an investor. I will take it from the credit manager point of view. So who is making large bet and who is making a many small bets? Large bets are making usually the private equity firms and private credit managers investing into the large cap companies. And typically this behavior you see in the US. So not every private credit manager can afford actually to do this a few large transactions. So usually it's a device of the large managers like Apollos, Blue Olos, and so on, and they do many large actually transactions. Then who is doing a many small bets? Those might be some specialized like managers or some mid-tier firms trying to do like a few of these transactions. Where you can consistently do a lot of small bets, then you need to pick an asset class and have a uniform credit process. And then you are able to create a diversified portfolio around a single asset class. So that's one way. Another way how to achieve it, that you will be co-investing with some large managers. So let's say you have access to a large managers, and I say, I'm gonna be putting maybe a few $1 million to each of the large deals. And there's a matter of your access. This is usually the play for the large family offices. They can do this. Co-investing, and then relying on the underwriting of the large manager. And that's how you can have many small bets. If I would put it from the Kilde point of view, we are in that bucket of the many smaller bets, but in a uniform asset class so that we can apply the same credit risk underwriting model. And our strategy is basically three things. One thing, it needs to be a consumer finance, SME finance, highly diversified, collateralized portfolio where we invest. So it needs to be in this area. That's number one. Second, we select the best loan origination platforms, so loan originators we can find. So we only take about 10% of the whole population of the originators which we see in the pipeline, and select the best of the best. And then the third one, we diversify across different geographical markets. So we are in Southeast Asia, we are in India, we are in East Asia, we are a little bit in Central Asia, we are in Europe as well. And the portfolios are roughly 50-50 between Europe and Asia actually. And the reason is that I see another three main risks in our investing, which we mitigate through our approach. It's a credit risk, it's a currency fluctuation risk, and it's a regulatory risk. Taking the first one, the credit risk, this is paradoxically the easiest one. We are mitigating it by selecting the best of the best loan origination platforms. We have a certain criteria of the size of the platform, which is eligible to work with us. So these are relatively large origination platforms, large borrowers from our perspective. And we monitor them on a quarterly basis, so we see that they are sliding in the quality. So we spend a lot of time on the credit risk because this is something which we can influence directly. But there are these two other risks we can influence only indirectly, and the more important they are. The currency risk. You might have noticed the sharp decrease in the US dollar just yesterday. We are shooting this on 21st of January, Wednesday. The loans which we are doing towards our borrowers, Kilde, they are denominated typically in USD. So it means actually sliding USD down is a good for our borrowers because it's cheaper for them to repay. But sometimes it's the other way around. Some currencies are depreciating even further. Like look at Indonesian rupiah, for instance, has a bit of an issue, similar to the US dollar for similar reasons as well. That might make harder for the borrowers to repay. What we do around the currency risk is that we bundle it into the credit risk, and we stress test the payments of the borrowers against depreciation of the local currency. And if we see the currency sliding, then we also heighten the monitoring of the borrower, and we might actually start decreasing the exposure to relieve them actually from their interest rate obligations. Then the third risk is the regulatory. This is the trickiest one. So what happens from time to time that the government may say, as just happened in the US, all the credit cards debt should be maximum 10% interest, let's say, right? What like usually happens, it reduces access to the consumers who would like to use the credit card, but they don't have enough credit history, or they may have some past negative credit history. They will completely lose the access because just for the 10%. From the risk perspective, cost perspective, doesn't make sense for these lending credit card firms to serve the market. So these kind of things happen in a different markets and at different times. It has this like a long-term negative effects to the access to the credit, but it has also a short-term effect that when you have an existing portfolio and, for instance, suddenly it applies to the existing portfolio, that's the worst. It's like a shock for the whole portfolio. Or it applies to your future loans, that is also another shock, because you need to reposition your strategy on the origination. And it happens in our portfolio several times in several markets. We have been always supportive and always been watching the adjustment of our borrowers very closely. And what we again typically did, we paused a bit of funding, like for a while. We monitored very closely what was happening, how the transition happening, and then once the transition into a new segment, new product, which is compliant with the new regulation, came into effect, we resumed the funding again and start growing our position again. Yeah, so in conclusion, large bets versus many small bets, both strategies are valid, but it depends if you can pull it out, right? The strategy, who you are, it really matters here.
This skill part to it. And is there a number of borrowers that's simply too many? Because Kilde right now, we have about 30 borrowers in our total books. Do you think as we scale that could at some point hit a number where we just need to say stop? Or is there no stop?
Well, it depends who we are, right? If we are able to monitor those 30 borrowers with our team without sacrificing quality, like the more the merrier. At the same time, there could be also the question you could also ask me, it could be the depletion of the pool of eligible borrowers, right? If there would be no more like eligible borrowers, and we start like going into like less desirable borrowers, that wouldn't be a necessarily good thing. But fortunately, we don't see that. The MBFI, non-banking financial corporations market, is very deep, and we estimated that we could deploy $5 billion into this market, and we only deployed so far 200 million, and the current outstanding portfolio is about 168 million in total.
Plenty of room. Thank you, Radek.
Plenty of room, exactly. Thank you very much for your questions.